In this video, I'm going to share with you how to invest in real estate with no money. In fact, this is the same process that I used to buy 14 cash flowing properties with zero out of pocket. Now, after reading Robert Kiyosaki's Rich Dad Poor Dad, I became obsessed with this idea of financial independence. Basically, when your passive cash flow becomes higher than your monthly expenses, you're free. But the challenge that I had is that I needed the money to get into the deals. I needed the money for the down payment and I needed the money for the holding costs. So in this video, I'm going to share with you step by step how to find a deal, how to fund the deal, and how to do it without spending any of your own money. All right, so let's start with finding the deal. They always say that if you find the deal, the money will follow. There's different places that you can go to get deals. My favorite place is direct mail and local real estate investment clubs. But you could also do anything from running radio ads, text message campaigns, cold calling, and even using services like PropStream. My favorite list to use would be the probate list and the pre-foreclosure lists. These generally have very highly motivated sellers, and both lists have enough data in the database to where you could scale this process. Okay, so you have your motivated seller lists, you're calling them, you're texting them, get them on the phone, and you book the appointment to go see the property. When you go visit the property, I have a process that I follow. I take pictures of everything from the exterior, the street, the interior of the property, each rooms, and even do a room layout. Now, the reason I do all that is the more information that I can get up front, the easier it is to analyze the deal when we get back in the office. Plus, you may have to refer to all that information down the road as the owner of the property. And there's no point in driving to the property every time you're trying to remember what the room layout looks like or how many bedrooms and how many baths that property has. So write all that down up front. You also want to get to know the neighborhood. I go out with local realtors that know the area. Sometimes they own properties in the area as well. And we also often will go out to eat, grab coffee or lunch in that community to get to know the area. Now it's time to analyze the deal. So let's get into the numbers. Quick side note here, I don't always obsess over the list price. It's more about the numbers that work for me. So oftentimes I'll explain to the listing agent, I'll explain to the seller, we may not be the highest offer that you're going to get, but we are the most solid offer. We make our offers unique in the sense that I've offered things like putting a pod outside of the homeowner's house to help them get organized when they move. I've even helped hire an organizer for the homeowner to make things easier through the process. And of course, like every other investor, we do cash and as is. So let's dive right into the numbers on an actual real property that we bought in Jersey City. Now, this property was not in the most desirable area, but overall we knew that the area was starting to improve. In fact, look at these before and after photos of the property. This is what it looked like. This is what the neighborhood looked like when we bought it. And this is what the neighborhood looks like now. We bought this house here in the middle, but look on the houses on either side, you can see they have improved significantly as well. So we bought this property for about $75,000. All right, so let's say you buy a property for $75,000 and the repairs needed are $100,000. The closing and holding costs of $20,000, meaning you're all in for $195,000. Now, the after repair value of this property is $360,000. So there's plenty of meat on the bone, but that's because we're buying in a not so desirable area and the house needs a lot of work. In this example, this is a 2-family property. Now, when you're buying a property ahead of time, you need to calculate all of your numbers. You need to anticipate what the rents are going to be, what the value of the property is going to be, and what all your holding costs are as well. You can use a local realtor or an appraiser or other investors' opinions to help you get there. This is why I love joining a local real estate investment club to get to know other investors that are investing in that community. So a 2-family property has a total rent roll of over $3,200. When we take out the operating expenses like the taxes, insurance, utilities, maintenance, property management, the total operating expenses are about $1,000. So our net operating income is $1,896. From there, we subtract the debt service, that would be the mortgage. With a mortgage amount of $200,000 at a 30-year amortization, the payment's about $1,150. So our net cash flow each month is over $740 per month. So on the surface, this looks like a really great deal. and we're ready to move forward and make an offer. Now, if I take it a step further and I'm all in at $195,000 and I get a loan amount for $200,000, even after closing costs, there's actually going to be some extra cash left over that we could take as our paycheck. So in reality, we got paid to buy a property that makes us hundreds of dollars per month. Plus, it'll be increasing in value over the years. And the mortgage, the debt, is being paid down. This is why I love this strategy so much. Now, the appraisal on this property came in at an after repair value of $360,000. Banks will lend you anywhere from 70 to 75% of that number. So if we were to get 70% of that number as a cash out refi loan, that would be $252,000. If we're all in under 200 grand, we could actually increase our paycheck at the refi to close to $50,000. However, we're going to leave some equity in there, which is always a safe thing to do, and that will actually increase our monthly paycheck from the property. Okay, so we're back to our original issue is now it's time to buy the property. We don't have the money. We know that we can get a hard money lender, a reputable one, that'll help us with the purchase, but we still need our down payment. What I do is I use business credit for the down payment. You can use business credit cards or business lines of credit. The process is really straightforward. You need to have a corporation or an LLC, so a real entity. You want to boost up the business credit score of that company. You can do that using services like NAV. And then you want to work with local community banks and credit unions that are offering no-doc business credit cards and business lines of credit. I have a lot of great content here on this channel on how to find those banks. But recently I got $25,000 from a local credit union as a business credit card. Now there's different ways to pull cash off that business credit card, but one of the easiest ways to do that is use a service like Plastic. You have Plastic write a check or send the money to the title company. Make sure you do that ahead of time. The money's held in escrow until the closing takes place. The rest of the money is going to come from the hard money lender. Now, the hard money lender needed me to put about 10% down on the property. That's 10% of the purchase and 10% of the repairs. Plus, I needed some money for closing costs and holding costs. So the total amount of business credit that I needed is $37,500. This can be acquired with 1 or 2 business credit cards or even 1 business line of credit. For example, in our area, TD Bank offers up to $100,000 business line of credit without requiring financials or tax returns. And I also got approved for that as well. Let's move to the repair process. You want to get lots of quotes on either the entire renovation of the project or a handful of repairs from subcontractors. It just depends on how you want to approach the project. So get between 3 and 5 quotes and consider partnering with someone on your first deal that knows what they're doing, that's trustworthy, because they're going to make it a lot easier to guide you through the entire process. I still joint venture with people to this day because we each bring a different skill set to the table. Okay, next step. Make sure you pull title so that you don't have any surprises. Do all your inspections, the more the merrier. You are buying the property as is, but you want to know what you're getting into. And then schedule an actual closing date. Throw it on the calendar because everything you're doing is going to work towards that date. Don't forget to get property insurance for the deal and consider opening up a separate bank account for the project because it'll keep everything separate. That's really up to you and your CPA how you want to structure that. But one advantage of doing that is in some cases as a business owner, you can get additional business lines of credit or business credit cards for each account that you have at the bank. So for example, with PNC Bank, I have multiple business credit cards with them because I have multiple business checking accounts with them. That can be huge as a business owner. All right, so right after you close on the property, you want to secure your asset. And if you're given the choice between doing a larger repair now or down the road, I would do it right now. Now make the big repairs today because you're gonna have to make them either now or 5 years from now. It's a lot easier to make those repairs right now while the property is vacant than while the property is occupied 5 years down the road. Plus, today you actually have the money and the funds to actually make these large repairs. It's always a lot better to put all of this on your budget and do the major repairs up front than have it bite you later down the road. All right, for the next step, this is the process of how you can buy as many properties as you want because it's time to refinance the deal. If you're doing this in your personal name, you're gonna get limited to how many deals that you can buy. You're gonna start to become over encumbered, and most refi loans actually limit how many properties you can do. On the business credit world, if you bought the property in your LLC or a corporation and you refinance with one of the local community banks or credit unions like I mentioned earlier, there's actually no limit to how many refis that you can do. In fact, in many cases, you can pull your cash out of the deal as soon as the property is rented out. That means you don't have your money tied up for that long. You can quickly refinance the deal, pay off the hard money lender, pay off your business line of credit or business credit card, and now you have your money to jump into the next deal. In this example, you've come out of pocket $0, and now you have a property that's paying you month after month. So as a quick reminder, this process is to work with local community banks or credit unions in your area. Most of them are portfolio lenders. That means that they lend their own money. And if they're lending their own money, you don't have to fit inside of a tiny little box, and it's a lot easier to work with a local point of contact at the bank to get the refinance done. After your refi, sometimes you have money left over, or if you went over budget, you may not have money left over. In that case, the money that's inside of the project is getting an ROI. But that's why it's so important to make sure your numbers are right on the front end. Because in the majority of cases, you can refinance, get all your money back, maybe even put a little money in your pocket, and then you can move right to the next deal. All right, now it's time to get a tenant for the property. I use a service called Buildium. Buildium's really cool because it keeps everything organized. And when it markets for a tenant, it puts the listing out on all the sites of where tenants are. I have those calls answered by a licensed realtor or property management company. They screen the tenant, they give me a summary of my options, then we move forward with who we think is best. Now take your time here. It's always better to have a vacant property, they say, than a property that has a non-paying tenant. Make sure the tenant can afford the property and be selective. Eviction processes can be expensive and very timely, not to mention the loss of rent while you're trying to evict a tenant. So yes, we do allocate a portion of the budget towards vacancy, but just take your time while you're selecting a tenant. So have good property management in place and make sure you have your checks and balances in place as well. I like to give my property management authority to take care of repairs up into a certain dollar amount. It could be up to $500 or $250, whatever works for you. But the point of me having it written that way with my property manager is I don't want to get the phone call on Christmas morning that the toilet's clogged. They know that they can take care of that and they can address that, and they've been empowered to do so. At this point, collect your money, do your accounting, and you could do either monthly distributions or quarterly distributions. I do recommend that you meet with the CPA a few times a year just to make sure everything balances out. Now it's time to reflect on what worked and what didn't work. Not all of the deals that I did went perfectly well, but many of them went great. And what I mean by great is that we bought them low enough to where we could make repairs to the property to bring it up to the value of the other properties in the area. Then we refinanced the property and got all our money back to pay off the short-term debt. Then we used that money to buy the next deal. And now you have an asset that's paying you every single month with zero out of pocket. So the big question is, how many do you want to do? Let me know in the comments below. And hey, if you like this video, go ahead and hit the like button and subscribe, hit the notification bell so you'll be notified when the next video comes out.